Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a morning Forex technical report ahead of the U.S. jobs report, which will be released at 8:30 a.m. ET. Expectations are for the unemployment rate to stay steady at 3.7%, for non-farm payroll to rise by 200,000, that was versus 261,000 last month, and for the average hourly earnings to rise by 0.3% versus 0.4% last month. We also have Canadian jobs report with a small gain expected of around 5,000. That comes after an oversized gain of 108.3 thousand last month. Most of the job gains last month were in the full-time employment sector, so we'll see how that mix comes out in this month for the month of November. So let's get into the technicals that would be driving the markets and the biases after the jobs report, what key levels are in play, and why. We'll start with the euro versus US dollar. Looking at the euro versus US dollar on the daily chart, the 50% midpoint of the move down from the 2022 high to the 2022 low. Price comes in at 1.05155. The price is above that level at 1.0537. So you can see that the bias is tilted more to the upside, moving above that 50% midpoint, and that's going to be a key barometer through the number. If the market price should move back below the 105.15 level, and then probably the 105. The 105 level, that was near the high price from earlier this week, and then the 104.79.8 level, which was the high price from mid-November. That would be more bearish for the euro versus US dollar after the jobs report. It would have to be a stronger jobs report in that case, most likely. Move below that area here, so 50% high here, and we go back toward the 200-day moving average at 103.66. On the top side, the next key target area, from my perspective, comes in against this swing area through here, where we have a number of different swing lows and swing highs all coming in between this area between the 106.15 and 106.347. Move above that level and we start to look toward the 61.8% retracement. Those are the levels on the daily chart and the roadmap for the euro versus US dollar going forward. Let's take a look at the dollar versus yen next, and this currency pair continues its move to the downside. If I take a look at the daily chart here, yesterday with the price moved below the 38.2% retracement of the 2022 trading range. This is one of those currency pairs, or the currency pair that really moved to the upside, trended to the upside, but over the last couple of months we've seen a rotation back to the downside and getting below the 38.2% retracement level right here, open up the door for further selling pressure in trading here today. Another key technical level was broken, that being the 200-day moving average. That's a green line in this chart, and you need to go all the way back to way back here. Keep going. Right here, this was February of 2021, the last time the price traded below the 200-day moving average. So it is a significant shift to the downside for the dollar versus yen. We'll watch that level as the barometer through the employment number. A stronger number that leads to higher interest rates and lower stock prices would probably have the price moving back above the 200-day moving average at 134.504. Any weaker data would have the price moving toward the next key target, that being the 50% midpoint of the same move to the upside, the 2022 trading range. So keep that level in mind on the downside for the dollar versus yen. For the sterling versus US dollar, this pair also moved above a key longer-term technical level yesterday. That was the 200-day moving average, a green line in this chart. That level comes in at 121.47, and it will be a barometer in through the jobs report today. If the price should move to the downside off of a stronger U.S. jobs report, we should see and break back below the 200-day moving average. That would certainly be a disappointment and likely lead to a rotation back toward the 50% midpoint of the 2022 trading range, coming at 1.20499. Let's call it 1.2050. So be aware of those levels. Of course, we're currently trading about 150 pips above that level at around the 122.91. So there is some room to roam to the downside here. What would be an interim level ahead of the 100-day moving or 200-day moving average? Actually, there isn't that much, but If I were to maybe look at the low prices here today and the low price off of the corrective move yesterday, around the 122.21 level, and then maybe the 122 level before we start to look down toward the 200-day moving average on the downside. So those would be my levels on the sterling versus US dollar. On the top side, we are testing a swing area, as you can see here. If we go back in time to these swing levels, let me get my arrow here. Swing high here, or swing low here, swing low here, swing highs through here, swing highs through here. We move down back to the downside. And we're back to this area right here before the market rotated quickly to the downside here off of the political news there. Rotation back to the upside. So we basically completed this lap to the from the downside to the upside from this point right here. So getting above the 123.31 level would have traders looking toward the 61.8% retracement at 124.507. On the top side, that would be the next key target for the sterling versus US dollar. Finally, let's take a look at the dollar versus Canada after all they have their jobs report coming out. And in this currency pair, as you can see, off of the hourly chart, the high prices right through here, in both the last two trading days have seen willing sellers against the rising 100-hour moving average. Now that moving average is starting to move to the downside here a little bit. So it's starting to shift to the downside, but sellers against those levels kept the lid, kept the sellers more in control, at least a little bit more in control. We're actually in neutral territory because we are in between the 100-hour moving average above and the 200-hour moving average below. We are currently testing the 200-hour moving average to the downside, so the bias is toward trying to shift toward the negative side, but we'll have to see if that momentum continues through the jobs report. Lots of risk going in through that report. So speaking of risk, there is a lot of risk going through the jobs reports here today, so be aware, be prepared. A lot of times it's a coin flip. It's a gamble as far as trading goes. That's why I try to outline these levels, these bias levels, to potentially hop on if the data is marginally or not marginally more strong or more weak than expectations, and then you have your bias levels. And if we break through some of those levels, it gives you some clues as far as the market's direction and the market's bias toward those currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.